Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on Wefunder, but also the different resource providers and mentors helping founders along the way. Huzzah! In this interview, we chat with Maria Springer, the founder of Capital Dept, which provides end-to-end fundraising support for CEOs. Over the last year, Maria and her team have helped a growing number of Wefunder founders raise multiple millions in community rounds. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. All companies raising on Wefunder are given an equal opportunity to participate in the podcast based on the progress of their campaign. Wefunder gang, take it away.
Hey everyone, Jonny Price here on the Wefunder team. Welcome to another episode of Adventure Capital. And today I am delighted to be joined by Maria Springer, who is the founder of Capital Dept, which is a marketing agency, would we say, that helps founders run community rounds. And we've been developing a really solid relationship with over these many months. So Maria, great to have you on the podcast. Thanks for being here.
Yeah, thank you so much, Jonny. I'm thrilled to be here.
And maybe you could start by just giving us a quick overview on what you guys do at the Capital Dept. Do you call yourself marketing agency? No. Fundraising coach?
Yeah, we're a fundraising advisory firm, I guess you could say. But essentially, Capital Dept helps founders raise capital with ease. And we're on a mission to create access to capital for all. And we've helped our clients raise over $100 million to date. We're founder-centric, sector agnostic. So we help CEOs across a wide range of industries by giving them leverage on their time so that they can get back to actually running their companies, which is usually why they started a company in the first place.
Love it. And we'll go into a little bit more detail. I'm kind of curious about, the history of Capital Dept and, the types of fundraisers that you're helping founders with. But let's start with maybe your own personal background. There's a beautiful overlap in our distant past in East Africa that we got to cover as part of this. But walk us through your background and how you came to be running Capital Dept in early 2022.
Yeah, absolutely. So I was born and raised in Los Angeles, currently in New York, have lived in over 7 countries. And when I was 22 years old, I co-founded a social venture called Livelihoods. And Livelihoods still exists in existence today under a phenomenal leadership. Employs young women and youth across informal settlements in East Africa to distribute clean energy technologies like solar lamps and clean cook stoves, et cetera. What's interesting is that when I set out to co-found Livelihoods, I never realized that I would be tasked with all of fundraising. And I literally used to Google how to overcome the fear of fundraising. I was petrified of asking for capital. I didn't know how to do it. I hadn't seen anyone do it. And there was not a lot online. So I just had to muster up the courage to get it done. And that was a lot to take on, given that I was leading a team at the same time.
That Livelihoods was for-profit social enterprise or nonprofit?
It was structured as a nonprofit social enterprise, yeah.
So you were fundraising for grants, basically.
Grants, foundation capital from philanthropists, et cetera.
This is a random aside, but is it easier to raise grant funding from foundations and philanthropists or raise investment capital from VCs and angels?
I 100% believe it's easier to raise investment capital from angels and venture funds. Yes,
I would imagine so. Yeah, that's my kind of take based on Wefunder versus Kiva as well.
Yeah, exactly.
Hope of a return is definitely helps with getting more money coming in the door. And
totally.
That's the overlap that I was talking about. So before Wefunder, I worked for this nonprofit Kiva.org for 7 years and was brought on to lead this team called Kiva Zip in 2011. And we were making loans through M-Pesa, mobile payments platform in Kenya, to micro entrepreneurs, mom and pop shops.
Mm-hmm.
And so we had these like organizations on the ground that we called trustees that we would partner with and then would help their clients get access to Kiva Zip loans. And so Livelihoods was one of those trustees. And when Maria and I were hanging out in Nashville the other day, she was, telling me about Livelihoods. I was like, wait, I think you were one of our first partners on Kiva. And
Yeah.
so that we go way, way back. I think we maybe met in Nairobi.
I think so.
2012, 2011, 2012 or something with Akash as well.
Yeah, you definitely have an incredible career, Jonny, sort of at the forefront of financial innovation.
Well,
and that shouldn't be discounted by any means. Yeah.
You too. So okay, so Livelihoods. So you were running this, and then how did you get from there to Capital Department?
Yeah, absolutely. So I stepped down as the executive director of Livelihoods in 2014. I moved to West Africa, where I worked for an investment fund deploying capital in post-conflict countries like Somaliland and Liberia and so forth. The Ebola outbreak.
So you went from kind of, very low income, kind of small kind of stuff with livelihoods, I think that's fair to say, to kind of deploying larger sums of capital. Is that just because like you saw, okay, if we really want to make an impact and move the needle, we need to be deploying larger sums of capital here? Or
I was sort of interested in seeing how private markets could help influence could influence the quality of life for people, right? And working for an investment fund gave me insight into how I could invest into African entrepreneurs, right? So as opposed to myself, being the co-founder, it was really interesting to figure out how do I deploy capital to really talented African founders. And so I not only was able to do that, but also sort of learn the ins and outs of how, investment fund might be thinking. Yeah. And unfortunately, the Ebola outbreak hit and I had to leave Liberia. And I ended up going to business school. And from there, actually started a film fund for a year, produced 2 documentaries, and then realized, wait a second, everybody keeps asking me to help them raise capital. There's something here. I'm actually quite good at this.
So when was Capital Department born?
I guess in 2017 in London. So that's when we began. Yeah.
And how big is the team now? And like what kind of, like traction is, I don't know if traction's the right word, but like what, how many clients do you have and kind of what is the business look like today?
We're growing really, really quickly. We have a team of 4. Yes.
We're sending a bunch of awesome founders Maria's way. So yeah, you can you can thank Team Wefunder for Capital Department's explosive growth.
This is absolutely true. We couldn't be more thrilled to be supporting you all. We have a team of 4. We're actively hiring. If anyone's interested, they can get in touch with me. And we've helped raise over $100 million to date for a number of campaigns.
And do you do Reg D as well as Reg CF? Like what do those fundraisers typically look like?
Yeah, so we do help founders raise venture rounds. So pre-seed, seed, Series A, Series B, all the way to Series C. But our primary focus right now is Reg CF, and that's because we just have a unique interest in, helping expand access to capital, especially for folks, who have, traditionally been overlooked or underestimated by traditional institutional funds.
Yeah, I love the mission element of what you guys do. Yeah. I think that's partly why we get on so well. We fund a PBC and a B Corp. And so, and kind of what typical kind of range of, kind of, let's say, amounts, right? And you've been kind of working with some of the larger Wefunder campaigns. So kind of stage-wise, kind of, fundraising amount-wise.
Our sweet spot is definitely when it comes to a Reg CF campaign on Wefunder is for folks who are looking to raise 2 million and above. And that's just because the amount of work that goes into launching a successful campaign is quite big on the front end. And so we just want to make sure that, if you take into consideration, all the amount of work that we're investing in it, it's really worth it for the entrepreneur. Plus, we love working with ambitious entrepreneurs who are super talented and want to raise a ton of capital. It's a lot of fun.
And in terms of the kind of the service offering that you guys provide. So there's a bunch of different ways in which, you can help founders, right? So there's like the putting together a beautiful pitch deck and a profile page, and working with them on kind of, you said a phrase when you spoke to our team meeting a couple of months back that stuck with me around like treating investor kind of management as funnel conversion and CRM, which was a new kind of concept.
Totally.
I really liked, and then there's kind of like the copy on the marketing emails and social media, and there's so many different kind of ways, and there's like ads and kind of analytics and pixels and so many different kind of aspects of fundraising, marketing, a Wefunder community rounds. What are the different ways in which you kind of help founders, and which of those do you kind of focus on and specialize in?
Yeah, so I'm really happy that you talk about this idea of the pipeline, because one of the things I learned when I was Googling how to overcome the fear of fundraising is that it's really not personal, right? Fundraising is a sales process like any other. And what you're selling is your company. You're selling either equity or potential future equity, or interest on a loan, et cetera. And so if you think about it that way, you can actually build a pretty robust sales pipeline, and even apply a lot of the philosophy and learning of a traditional marketing and sales team to the fundraising process. And so what we do on the funnel side is really work with founders to understand, okay, who is your audience that you have now? Right? In some cases, that means that, in the case of Up Council, for instance, they had an email list that was pretty substantial. And so they had a broad customer base, which was excellent. And then in the case of, Adam Limbs, which is pre-revenue, they don't have a customer base. And so we had to identify another, avenue for building out that audience. And so
can I just say, like, just to double down on this, I think it's such an important point, and you guys do this so well. So what I've seen with some agencies is a one size fits all kind of blanket approach, right? It was like, we do ads, and so every company, we're going to do Facebook ads, right?
Yeah.
And it's like, for some companies that may make sense if they're kind of consumer facing, and they if someone clicks on the ad and invests, then that person may go on to become a customer and spend money with you, and so you're getting revenue as well as capital from that Facebook ad spend. And so there's kind of two birds with one stone. The economics can work, but like oftentimes, no, that becomes a really expensive way to raise capital. And so to have a kind of bespoke approach where it's like, okay, for you, Atom Limbs, this is the strategy. For you over here, totally different approach. It's just so obvious, but like so many people in the space don't do that. It's really frustrating.
Yeah. So we really figure out, okay, from every stage of the funnel, your top of funnel, middle of funnel, bottom of funnel, right? This is just standard tech sales,
right.
Team stuff. At the top of funnel, like who's in there? And then how do we remove the friction all the way down to closing so that we get the cash in the bank and we're a success. And so obviously we look at, even when a campaign is live, Google Analytics, conversion rates, et cetera, and really analyze the ROI of all of our activities. So we specialize in organic investor acquisition, not paid investor acquisition. But
so
we
much
really
better.
Yeah. Okay. Yeah.
I love. We had Tyler Hayes on the podcast, the CEO of Atom Limbs, who you're working with, and I really liked the interview with him. He said something that was so powerful to me. He said a phrase of, "You got to find investors that share your crazy," and I just loved those three words. And so, and if you can find people that share your crazy, then like you can recruit them organically without spending money on ads, right? Sometimes, okay, maybe some ads spend can get you in front of people that share your crazy. So again, it's like, not to say it can never work, but like, yeah, the kind of organic strategy was just, we just way prefer that to an ad-based strategy.
Yeah, absolutely.
Maybe talk us through like the plan, or the kind of, okay, you work with a client. There's a client that wants to raise $5 million on Wefunder. You get connected to them. They say, yeah, Maria Capital Department sounds awesome. Let's do this thing. what are the kind of, building blocks or the kind of the bullet points of the plan over the coming weeks and months to get them to their goal?
Yeah, absolutely. So number one, like one of the things that we talk about is sort of clarity, confidence, and conviction. And so we just make sure that all those pieces are in place before we even start executing. And so when it comes to clarity, for us, that means clarity around, what you're selling and to whom. And so that's where you build your pipeline and you really understand even the price, right? Because the price also signals a ton and how much you want to raise.
You mean the valuation or the?
Yeah, the valuation. Yeah, it's a big one. And so sometimes you can see pre-revenue companies with valuations that are, double companies that are generating revenues in the millions of dollars, and it works really well. So it's part of the story. And then we look at sort of, whether the founder is ready to get rejected a ton. It's amazing to me that people, say they want to fundraise, but they haven't heard a no or a yes or a maybe or anything, and they say they're fundraising. Right. So we really look to work with founders that are ready to get rejected. They're ready to get in the trenches. They don't see this as personal. And, we're teeing up so much activity for them in terms of what they're doing that they hardly even notice they're getting no's. And then finally, I think, and this is most important when we take on somebody that, when we're considering who to take on, is that there is some sort of mission that's going to move people, right? If you don't have a story that moves me or you, it's going to be really hard to get people to part with their checks and their capital. And that is just so critical to a community around, because how are you going to build community around something that doesn't land? Right. And so you have to have that conviction within the business. And so those are sort of the three things that we have to see first.
Got it.
Yeah.
And then, you were saying there, like, actually, let me go in a different direction. So that's all. It's almost like the psychology, right? And just kind of this is why we're starting with these 3 C's, I guess. That's kind of just getting the founder in the right mindset and working with a founder that is going to be, kind of willing to go out there, pitch, get a bunch of no's and fundraise. So that's kind of almost, that's the kind of step 0 is like getting the mindset right. What's next? Yeah.
So I actually thought about this. I think it's in 5 stages. It's a lot of stages, but it's true. Number 1 is strategy, then the private period, the public period, the closing period, and finally collection time. People overlook collection time, probably most important phase. So on the strategy side, that's when you're really focusing on the narrative. We work with all of our clients to make sure they have a simple 1-line mission. So if someone says, why are you doing this? They know.
I read so many taglines and it's like, oh, that is like a lot of jargon. It's a lot of words. And after the jargon and the words, I still don't know what you do. Even if I furrow my brow and exert cognitive load to, try to figure it out, I still can't do it. And so, and it's like, it seems kind of weird to obsess over 6 words, but like it really is so critical. And those 6 words are like everywhere on the Wefunder website, everywhere on, kind of social media posts, everywhere on emails. And so like getting that initial click rate from a brand impression from whatever 0.1% to 0.3% is like 3 times as many people kind of in your funnel now.
Yeah. And also then investors will be able to talk about what you do. They'll be able to be your evangelists. But if it's too convoluted, they don't even have the opportunity to be able to invest themselves because they can't understand it, or B, evangelize the opportunity, right? So that's really critical. And what we find too is that community rounds are mission and movement driven, no matter how commercially viable, your company is. Even if you are going to be, IPO one day, you still have a mission, right? And so strategy.
So we've kind of,
narrative,
and with narrative, we're kind of outlining for the founder, this is the plan over the coming weeks and months. Got it.
Yes. And then really in the private, public, and closing period, in the private period, this is where we have the founder begin outreach to cold prospects, truthfully, that are angel investors. We also have them invite, if they have a customer base, their customer base. If they have existing investors, they invite their existing investors and their friends and family. And the idea is that we ensure.
Oh, sorry, go ahead. No, you finish the thought.
Yeah. So we ensure that during the private period, you're incentivizing people to come on with preferred terms. And those preferred terms allow you to say, listen, I need to tell you first before everybody else. You're an insider. You've been an early backer. You're so critical to us. And these are the preferred terms, and you can get in. Yeah.
Do you try to coincide the private period with the expiration of early bird terms? I mean, maybe it doesn't always match up perfectly, but.
I do. And I recommend Yeah, go ahead.
So it's basically like once, and for anyone that doesn't know, like, so on Wefunder, let's say you're raising on a safe with a 10 million valuation cap, and you're raising $1 million. It could be that the first 200K of that million is on early bird preferential terms, where you're getting investors are getting a 9 million valuation cap versus a 10 million cap. And so you're saying, in that instance, okay, 200K is early bird terms. So 200K is basically the private period. So in the private period, it's not just like, hey, exclusive access, friends invest first. We're kind of giving you a sneak peek, but it's also, and you get discounted terms. And then when you come out of private, you also kind of graduate to the 10 million post early bird cap. I like that.
Exactly. And the beautiful thing about the private period is that you can also talk about, it's a sort of a campaign within a campaign, because you only have a limited amount allocated for the preferred terms. So there's urgency and scarcity, right? And you can also talk about how they're selling out, right? And so people have to get in before you go public, because they will sell out, right?
Campaign within a campaign. What do you think is a good threshold for early bird / private? Is it a third of the total rounds, a fifth?
A third would be ideal. I mean, I always say the more the merrier in terms of that, right? Because the more that you raise before going public, the more likely you are to have a bigger campaign once you do go public.
Totally agree. That's another thing that's frustrating, is everyone wants to push the button to go public ASAP, and it's like, no, don't push that button. That's a bad first impression.
Yeah.
Everyone's like, hey, like, can you put me in the Wefunder email this week? It's like, no, like, you don't want 1.4 million people to see you when you've raised 51K. You want them to see you when you've raised 501K.
Yes, Jonny, I couldn't agree with you more. And for everybody listening, like, your raise starts when you file your Form C, or when you start accepting reservations, right? That's when your raise starts. Your raise starts when your campaign page is live and you're marketing it, not when you hit go public. Go public is just a strategy, right? That's not your campaign. Your campaign starts when you start asking people for money.
Totally. And so you mentioned 4 groups there, I think. Let me just see if I can remember those. Customers, angel investors, friends and family. I think you said existing investors, friends and family, and then kind of cold target investors. So you mentioned, like, this is who you're kind of talking to in the kind of private phase. Yeah. And what does that look like? Let's say, kind of existing investors, friends and family. Are you putting together like a Google sheet, or is there a kind of tool, a CRM tool that you recommend or that you guys use that's like, okay, let me put in a bunch of names? And like, one thing I'm always curious on is, like, what's the average number of names?
Oh gosh, it depends on the client, but it totally depends. I mean,
if you were, let's say, Capital Department, you guys are making revenue. I imagine bootstrapping, you don't need to raise money. But if you were to say, let's kind of, I'm gonna quit Capital Department, go launch like a cool tech company, raise $2 million on Wefunder. Like, how many names are on Maria's spreadsheet that she's doing outreach to in the private community round phase?
Totally. So number one, export all your LinkedIn contacts, right? Just Google how to export your LinkedIn contacts. So there you have thousands, people who are first degree connections. Mm-hmm. 2, you can also export all your Gmail contacts, right? So within an hour, I could probably build, just based on my existing in the world, a list of 6,000 people.
So I thought you were going to think about kind of more personalized outreach, right? But that's when you then say export my thousands of LinkedIn connections. That's like, that's got to be kind of a mass approach, right?
Well, so this is where funnel comes in and segmenting comes in, right? And this is where it's so critical at the top of a campaign to understand who are all your potential audiences. Who do you need to like, which audiences do you need to build or identify, and what audiences do you have at your disposal? So obviously, if I export a list of 6,000 people, I'm not going to email all 6,000 people in my private, right?
Phone call,
I'm going
coffee meeting with 6,000 people.
it's not going to work.
That'd be fun.
So you would segment them, right? Like, who are the folks that are influencers? Who are, angel investors? Who's somebody I know that runs a syndicate? Who's somebody I know that had a big tech exit?
How well do I know them?
Like, how well do I know them, right? Can I get them on a call? Or are they better served just with like a, hey, I know we met, and I'd be interested to hear if you'd be, want to invest, right? And it's just more of an email and opportunity with a link to the campaign once the campaign is successful, right?
So let me kind of go back to my question then. So let's say, okay, do the Gmail export, do the LinkedIn export, have like a list of 10,000 rows in a spreadsheet, right? So then we kind of go through and segment. What's a typical number for the segment that we are going to do kind of personalized outreach? First question, what's a typical number for that? And I know it varies, but just maybe a median or a mean. And then how do you do that? What does that kind of personalized outreach look like? Is that a personalized email? Is it like a text message, a call, you arranging to meet up for coffee?
Yeah. So this would be this particular example, I just want to stress, would be for somebody who doesn't have a customer list, hasn't done, a Wefunder raise, doesn't have, a massive email list. This is for somebody who's just like really starting from scratch. Right.
Yeah, got it.
Okay. And so, yes, absolutely. You would segment it and you would figure out, okay, who am I going to invite for a one-on-one sort of investor meeting? Who am I going to send my sort of, personalized emails to, inviting them to the campaign, probably in the public period. And then who am I going to just put on sort of like a mass email list, say like, you're receiving this because we've worked together before. I just want to get everyone involved because this is so important on so many levels. And
so those are the three channels: 1, in-person meeting; 2, personalized email; 3, mass email.
Yeah, I think so.
And so,
in this example, yeah.
And are you kind of a typical client? Is it like you should be having 100 in-person meetings, or 50 or 20 or 200?
Yeah, I mean, it's funny. We had a client last week saying, I'm taking too many meetings. And I'm like, well, then we've hit on a good problem. Because at the beginning of the engagement, right, it was like, can we get some meetings, please? And so I think
it
really
meetings for them was too many.
20 meetings in a week was too many, which is totally fair.
That was Zoom meetings.
Zoom meetings, yeah.
That's a lot,
right?
That is a lot. Yeah, fundraising is hard work. Yeah,
fundraising, it's a grind. And so, yeah, I think it depends on how much you're looking to raise, what your experience level raising is, what your conversion rate is.
Right.
But, ideally you're taking meetings with investors who have the capacity to invest, at least 5K.
And obviously you can throttle it, right? So it's like, okay, you can maybe have an estimate for how much someone is going to invest. And I always say, okay, I talk about it with existing investors, right? It's like, you can see how much someone invested on Wefunder, right? You can download that CSV of like who they are and how much they invested. So then you can take the CSV and sort it by descending investment amount, and then start at the top. And the people at the top that have done, 25K, get on a phone call with them, build a relationship with them, say, hey, thanks so much for investing. And you probably know a lot of those people already, but like the ones you don't, like, get on the phone. Hey, like, great to build a relationship, because maybe they can connect you to other investors as well. And you basically just keep coming down the list until, like, you get into like someone that invested $250, you probably don't want to take your time building a personal relationship on a phone call. But like, and it's also beggars can't be choosers to an extent.
Totally.
Right? You're working with companies that have raised 2 million, but some companies on Wefunder, it's like, I'm at $70,000 and I'm trying to raise 200K. It's like, for those guys, get on the phone with someone that invested $1,000, and
oh, absolutely. I can't agree more. I've had a client tell me that they, when they first started on their first raise before engaging Capital Department, they got on the phone with every single investor, including the $100 investors, and $100 investor became a $25,000 investor.
Are you kidding me?
No.
That's such an awesome story. Talk about an upsell.
Yeah. And so I would argue, like, if you want to know that, So if someone's investing 2,200 or above, they're an accredited investor and they probably have the likelihood of being able to do more without even having that phone call, right? So definitely get on the phone, or at least offer a phone call with everybody that invests 2,200 or more. And if you have time and you're looking for more leads and introductions, it's wonderful to get introduced from current investors to other potential investors. So at the $100, $250, $500 level, if you have the time, reach out, have those calls.
That's such a great point. Like it goes back to the kind of funnel management CRM, right? Like when I'm talking to founders, if they're referred by a founder that had a successful Wefunder campaign, they're so much more likely to go ahead and launch on Wefunder, right? So probably the same thing with investors. If you're being referred to invest in Adam Limbs by another investor that invested in Adam Limbs, then they're also going to have a much higher conversion probably because of that trust.
Totally. And that kind of goes into traditional sales as well. So it's like you land an investor and then you can expand the investor or get them to increase their investment. Land and expand, right? Just like straight up SaaS sales. Yep.
One kind of very tactical question that I've kind of always wrestled with, like, is the ask, let's say you get on the phone with an investor who invested 10K, build relationship, great call, great conversation, 15-minute call, they're asking good questions, build that relationship. Maybe they increase their investment. When it comes to them helping you get the word out, what's the right CTA? Is it like write your own LinkedIn post and share your LinkedIn post or tweet or whatever? Or is it like, I did this LinkedIn post, please just hit share. So it's like not necessarily in their voice, but it's like much lower lift for them. So much higher chance they'll do it. Or is it like, hey, are there kind of 2 or 3 people that you think might be interested in getting on the phone with me? And it's a much more kind of, individualized kind of outreach approach.
Absolutely. I would say that the LinkedIn share is the lowest hanging fruit. That should almost not even be considered an ask. Okay. Yeah. Like if you have an opportunity to make an ask on a call for introductions to other investors, like you should make that and the and would be, who are 5 people you think might be interested? Can I write you a forwardable introduction email for each of them once I've researched them? Right. And you write down their names, you research who they are, and you write this investor a forwardable email, right? So they can just say, hey, just caught up with the CEO. They're phenomenal. Would you like me to connect you directly? Right. And you get a double opt-in intro. And that is so powerful for fundraising that I can't stress that one enough.
The viral coefficient.
For sure.
Yeah. So, I mean, it goes back to kind of, it's related to Tyler's point about that share you're crazy. Another thing that he said was like, in order to get someone to part with their money, that's like a big ask, right? Especially if it's like $1,000, like a big ask. And so I think like, again, founders kind of over rely oftentimes on like social media, right? Where it's like, it's not a bad thing to do. Of course, it's a good thing to share the LinkedIn post and increase the brand impressions, and maybe you get followers and maybe you get some investors. But like at the end of the day, if someone's going to like part with their hard-earned money to invest in a company they've never heard of until this moment, like to have a deeper connection, be that a kind of personalized referral from an investor or a conversation with the founder or even a personalized email versus a mass email, like it's like you often need to go a little bit deeper in order to get someone over the hump.
Yeah, I would argue that like social media for fundraising is like a no contact sport, right? Like fundraising is a contact sport. Like you have to be in the game, and posting to LinkedIn or Twitter. Yes, it can move some capital, but it's never going to be your primary driver of capital in my experience.
So this is kind of on the private phase. And so you're, those 4 buckets you mentioned, customers, existing investors, cold outreach to potential angels, friends and family. Then you get to the early bird threshold. You kind of, okay, we're going public. What does that phase look like?
So this is the most important part to develop a really close relationship with your Wefunder team.
Yay,
or your
Wefunder
account
team.
executive, right? At Wefunder. So,
I
just
like
making sure.
account executive. We normally say account manager, but I think I'm going to use account executive going forward.
Yeah, you're
Prestigious.
your Wefunder AE. And so the Wefunder marketing team, I mean, you guys are just phenomenal. Like, shout out to Elena and Claire. Honestly, I'm in awe of them all the time.
They are amazing. Their copy is fire.
Brilliant, absolutely brilliant. Both very intelligent. And so it's really critical that you get on the Wefunder calendar, right? And so we all know that there's no you can't smooth talk your way into getting any benefits by any means, but because of the SEC regulations on all this, but you can do it in such a way that it's strategic. So what I would say is make sure that when you're announcing that you're public in the Thursday email, that your first dedicated email blast goes out the following week, that you try to vie for a spotlight as startup of the week within the following week, that if you raise the most in the top 5, in a given week, that you'll be featured in, the most raised section of a newsletter. You also have 2, Wefunder webinar like spots, right, in the weekly newsletter. And the reason I just want to start with the weekly newsletter is because this is a huge driver of capital, the weekly newsletter. And you can play strategically to get featured in it, by just performing and figuring out how you can get featured at least, ideally once a week, but at least once a month, because you guys have such a huge investor base, and you don't want to be a campaign that's invisible in those newsletters.
What are some of the most awesome tactics that you see? Okay, now we're moving into this public phase, and I guess for the private phase as well. But like probably more so for the kind of creative stuff, it's probably more in the public phase. Like some of the most impactful, strategies you've seen founders that you're working with do to really move the needle.
Yeah. So number 1 is partnerships, right? So there are a number of retail investor newsletters and publications like Investor Place, Benzinga, King's Crowd, Early Investing, right? So you actually do have to pitch these people. So I think figuring out who are the publishers and the newsletters and pitching them, because then you get access to their audiences, right? And so in the public phase, it's all about building beyond your audience. It's how do you get people at the top of the funnel to come to your campaign page and ultimately convert through their investment. Another way is press. We pitch press all day, every day.
Do you see press move the needle? Because I've seen a lot of, companies featured in news articles, even like the New York Times. I've seen a company featured in the New York Times linking to their Wefunder page that does nothing,
Wow.
But you've seen, and this is again, I go back, I think that framework that Tyler talked about was so powerful, right? Where it's like, the share your crazy thing. I think it's better for your company to be featured in this super niche publication, right? Everyone reading that publication is like really passionate about your sector versus the New York Times. The New York Times has a much bigger reach. Everyone wants to be in the New York Times, but like, you need to go deep. You need to really grab people's attention. And so I always say like the best kind of PR strategy is niche versus kind of mass market.
I couldn't agree with you more. It's really interesting, in the case of Adam Lim's, yes, we were featured in Bloomberg, we were featured in Fast Company, but on some of the biggest days of volume, it was, a niche publication about engineering, right? And so like engineers, that are interested in revolutionary prosthetics, really, were captured as the captive audience. I think also another client of mine said it best when he said that, press doesn't necessarily sell people that haven't heard of you before, but when you talk about press to your followers or your existing investors that are considering potentially increasing your investment, it sort of helps seal the deal.
Well, also like maybe the press doesn't drive the investment volume on that day, but maybe someone clicks to follow, or kind of is now like following Atom Limbs on LinkedIn or following Tyler on LinkedIn, and then kind of posts about something around closing time. And so it's kind of more top of the funnel kind of brand impressions, going back to that funnel analogy. versus closing. And so you might not always be able to track it back to, because it's not like they're clicking on the Fast Company link and then investing, but maybe they click on the Fast Company link, browse around, and then you get them later. So the attribution, I think, is very unclean with this stuff.
Totally. But I think one of the things it also does, it allows you to update your current investors and your followers on LinkedIn. And that's one thing that we do with regularity for all of our clients, is make sure we have super compelling Wefunder updates. In the first campaign I did, I thought the Wefunder updates were oversold and didn't invest as much in them. And I have really taken a hard turn on that one. I think Wefunder updates regularly drive traffic and investment to the page.
Well, probably also because you're now helping your clients write better updates, right? You see so many updates. And it's like, we passed 250K. It's like, that's nice. But what would be really nice is we just hired this badass CTO from MIT, or we just hired this multi-million-dollar customer, or hey, check out our growth rate. We grew by 30% last month. It's our biggest ever month, or we've improved our funnel conversion by this, or launching this product feature. And the example you gave earlier was, I think, a really good one. That's where press can come in. Hey, check out our feature in the New York Times, right?
Yes.
And anyone that's following the campaign is like, ooh, Adam was featured in the New York Times. That's cool. But that's a company I want to invest in.
But you bring up a good point, Jonny, which is we're selling an investment, right? So what do people want to hear from you? They want to hear about the quality of your company and how quickly you can move the needle, right? Mm-hmm. So actually metrics are so critical. When we are starting to define the narrative with our clients, we try to figure out, okay, what are the metrics that we can move the needle on during the campaign, right? If you're pre-revenue, it's a little bit different than if you're generating consistent revenue. Is it on contract renewals? Is it on the number of channel partners you have? Is it on your waitlist figures, right? But we want to show, and we work with our founders to hold them to account on month over month growth in their business. Because if you can't communicate month over month growth or a trajectory of, up and to the right, it's going to be really hard to sell your investors.
Totally. Yeah, 100%. Mm-hmm. So that's on the update side. What other kind of tactics have you seen the press you mentioned there? What other kind of tactics are working really well that we found?
Definitely webinars, right? Retail investors don't get the same access that institutional partners do, right? Venture partners, for instance, because they actually get to sit down with you, diligence you, look at your data room. It's a whole process and it takes forever. But retail investors still want access. They want to understand who they're investing in. And they want to understand, how they can connect with you and get their questions answered. So webinars are really important. And we're doing webinars with regularity for all of our clients, producing them and making sure that there's a panelist, one of their current customers or the senior executives on their team, and that there's a rich discussion about the potential of their business and their verticals. So webinars are huge. And also cold outreach. I love people who are okay with cold outbound. Cold outbound is one of the most important things because you have control over it, right? Mm-hmm. And so cold outbound can be done on LinkedIn, and it can be done via email, and you can get access to lists. You can have people help you build the lists, and you can have, people at Capital Dept build those lists and help you automate all the outreach and the follow-ups.
Mm-hmm. Yeah. We could talk for hours, but we'll probably be starting to come into land here. But okay. One, I love talking about mistakes. You must have seen founders make a lot of mistakes in fundraising. I mean, we've already talked about some of them here, but what are some of the more egregious mistakes that founders should avoid in running a community round?
Yeah, so I'll tie that in with the last two steps that we didn't get to cover around.
There's just so much to talk about.
I know, and I'm pretty nerdy on this stuff too. So on closing and collections. So in the closing period, one mistake that people constantly make is they don't do the follow-up. Just because someone didn't reply to your email doesn't mean they're a no, right? And so you have to do the one of the reasons I like reaching out to angels in the private period is because when you're closing, you can say, oh, we've just closed X dollars and we're closing in a week. Do you want to get in? Right. And so even if they went silent for 3 months, right? That follow-up in the closing period is so critical to move the needle.
This is great. I love the Daniel Kahneman book, Thinking Fast and Slow. I think this is in there. It's been in a bunch of places. Very well documented, but humans are averse to loss, right? So like, will you invest at the start of a campaign? Will that message will have like a lower conversion rate than like, this is your last chance to invest. If you don't act now, you will lose this chance to invest. This exactly the same message will get people to do it.
Totally. So follow-ups, I think, is where people make a huge mistake. They just don't get around to it. It's not, top of mind. And it's such an important source. And then also, if someone says, yeah, I'll put in 50K, but then you don't follow up with the link, or their investment's not coming through, and you're not calling them to walk them through the stages, right? Like, you actually have to close. A commitment is not capital, right? Capital is not counted until it's in your bank. And so I think founders get really shy about just like driving to the close.
Love it. One thing, you were kind of just hinting at this a little bit, but I love this quote, what gets measured gets managed, right? And so are you helping keep founders accountable, where it's like, let's track how many phone calls you're having every week. Let's track how many cold outreach emails you're sending every week. Let's track whatever, maybe dollars, or there's a stats page on Wefunder is cool, right? It's like how many page visitors, how many basket starts, how many basket completions, and investment volume did you get every week? Are you kind of helping founders like manage these metrics so that
Totally. Yeah, absolutely. And it's fabulous, because then they have to be held accountable. So we hold our founders to account. And so we actually have a dashboard that we share daily in an update with all of our campaigns around how much they raised in the previous day, what the average investment size was, what the conversion rate was, what our learnings and observations are. And we optimize, all throughout the campaign.
That's amazing.
Absolutely.
I just think that alone is just, because founders are very, very smart people, and they're driven people, right? So it's like, hey, here's the numbers. Just doing that alone is probably like pays for your fee multiple times over. So
totally.
Last couple of questions here. We could really talk all day. This has been so rich. This is awesome piece of content. I think every founder that's raising a Wefunder should listen to this, and we will promote it to them so that hopefully they do. We ask every guest a couple of questions. First is, what's one company that you would love to see run a community around so that you could invest in that company?
Hands down, it would be Harlem Capital, which is a venture fund. I'm sure you've heard of them, but they are based here in New York, and they're committed to investing in 1,000 diverse founders over the next 20 years. And I'd love to put my capital to work with them.
Amazing. Well, if you want to make an intro, we'll pitch them. Maybe you can work with them on the fundraising strategy. Great. That's awesome. Huge fans of those guys. Okay, last question. You've given so much advice for founders. That's the whole point of the last hour. But, one kind of last, standalone piece of advice for a founder.
Yeah, absolutely. So I would say take care of yourself, and make sure you have the support and the resources and the people you need around you to succeed. In some cases that could be capital department, but what I really mean is, if you're getting rejected nonstop, the campaign has had a lull, you just lost a client, somebody just quit, right? You have to take care of yourself. Nobody can fundraise if they look burnt out, tired, stressed, and like a maniac. So sometimes my advice for founders, when we're in, client sessions is, hey, you need to take a day off, and I really, really admire my clients that take vacation, take time off, protect their mental health, and you'll see it in their results, right? The founders that perform the best are the ones that take vacation.
Love that. I got a 6-week sabbatical coming up. So
well, there you go, Jonny.
I'll come back from that and I'll just be like, pew, pew, pew.
Without a doubt, you will be. Yeah.
Maria, this has been great. Thanks so much for your generosity with your time. Where can people go to find out more about the Capital Department and try to procure you and your growing team to, blow up their community rounds?
Yeah. So you can find us at www.capitaldept.com. That's short for department. Or you can email me directly at maria@capitaldept.com.
Love it. And yeah, if you're live on Wefunder and you want to connect with Maria and her team, then ping your account executive. newly christened account executive, promotion from account manager. Congrats to all of the account managers on the Wefunder team for that promotion.
Who are also all amazing. Yeah,
they are amazing. Yeah, we can put you in touch as well. But Maria Springer, founder of the Capital Department, thank you so much for your time.
Thank you, Jonny.
Look forward to continuing to grow together over the coming months and years.
Yeah, thank you, Jonny.
Bye.
Thank you for tuning into another episode of Adventure Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you're ready, Wefunder's here to help. Be sure to like and leave a review, gang.